present among us. Actually, I am also meeting for the first time, but going through his background and brief biota, I came to know it is like a Bhishma Pitama of banking. Bhishma Pitama is like a very godlike figure of a particular sector. So he's having more than 42 years experience in banking, and he spent around 27 years in commercial banking and around more than 20 years in cooperative banking. And he's running his own YouTube channel where he's sharing his thoughts of banking. And that's why he set up all these things here. So it will be recorded and it will be shared in the YouTube also. You can see later on. So he's usually as a policy making board of the different banks is giving services, and he's working giving service as a faculty member to different institutions on the program related to banking and other related areas. So we are really pleased to have him with us today. And sir, these are the participants, senior and middle level officers of Cooperative Bank of Oromia.
Okay.
And their bank is also on the path of growth.
Okay.
So they have come here to learn something new from the Indian system, which they can replicate at their level in their own country. They are very, very curious to know about our system, how our system works. So certainly, and they are very, very sincere and really eager to learn some new things. So I welcome Shri Kirwakar sir once again, and hope you will really enjoy his session. Thank you.
Thank you.
Good morning, everyone. Good. Feel a little sleepy. You are acclimatized to this Indian climate? There is no issue on that? You are not feeling sleepy? Great. See, I have been talking to number of bankers in the country, across the country. And I have always found that when they attend any banking related session, they almost tend to doze off. They feel very sleepy and they are not alert. Does this happen with you? It doesn't. Okay, I am very happy to note. Now we'll go for a very small test which I conduct with various management institutes, and all senior bankers are there, very senior and seasoned. And of course I also interact with young students of various management institutes, and I always find that there is one test that all of you fail. So it is a challenge to you, because I am a teacher first and a banker. Subsequently I am a banker. After having spent 42 years in banking, I find that there is inherent inertia in the bankers to listen, because bankers are meant to talk. They keep on talking, right? If they keep on talking, they typically have a habit of not listening, and there is always a disconnect between the eyes and the ears, and I can prove it right here. I can prove it. Should I prove it? I should, yes. So there will be a very small test for all of you. You have to watch me, and you have to follow my instructions very meticulously, very correctly. Okay? You will follow my instructions the way I tell you. Please raise your right hand like this. Please do. That's good. Put it under your chin. The only right person where eyes and ear coordinates are working perfectly, and rest of us, the light travels faster. So you are watching me, but you are not listening to me. Both these two instruments are very critical and crucial. Now, having your attention here, I got 1 hour to talk about first topic which the institute has requested me to address to you. I'm not going to talk about Ethiopia because I don't know anything much about Ethiopia except that you have a National Bank of Ethiopia, and then a couple of private sector banks have come up post 94, 95, 96. A lot of private sector banks have come up. I'm also being told that you are a cooperative bank but do commercial business. Right. So in true sense, you are not a cooperative bank for the simple reason there are no cooperative laws. And India is a maze of laws. It's virtual maze of laws. You will be surprised to note that the every Indian banker is supposed to know minimum 330 laws. You can see the misery of Indian bankers. But the Indian bankers have survived this on the basis of only one knowledge. I should know only 330 laws. I need not by heart them. But then if there is a need, I can refer to the particular law and go to the section and read and apply it properly. That being the story, despite having a firm legal structure, you will find very recently, almost 6-7 years back, a major law was enacted in India, Insolvency and Bankruptcy Code, which allowed pushing of the borrowers who are defaulting. But then I believe Ethiopia is a developing country, right? It's developing. It's not fully developed. It's in the process of development. We are still a developing country. Although we are 7th in the global index of development, but we are still developing. There are 6 countries ahead of us. You must try to check up your number on the World Bank's list as to where you stand. So the miles you have to walk, by the time you walk them down, you would be retiring. Even that as it may be, but our intentions for our country should focus on, we should do good for our own country. I'm talking of Ethiopia. Today I'm here to talk about this particular topic. I feel this is the slides are readable. Can you read the slide? Yeah. The digital financial inclusion and fintechs. It's a very huge topic, and I find that the topic being very huge, I had to cut short a lot of my slides for the simple reason that the time given or time allotted to me was an hour, 90 minutes time. So within 90 minutes, I intend to cover this. I'll be going very quickly. So you have to stop me wherever you find that you're not understanding what I'm trying to tell you, because if the message is not reaching home, my efforts are wasted and your efforts are wasted. So that should not happen. That's one of the key advisor. Secondly, the data here in this presentation I'm talking is of 2017, 18, 20. Very different data I'm going to talk. I'm going to talk of what India has done, where the India stands, and how it has made progress, how it has maintained its BPL line, that is below poverty line people, almost 7 to 8 years constant. It has not added to that BPL line during the last 7 and 8 years. It has not reduced also. India is a huge country, almost 140 crore or what you can say 1.4 billion people, and probably by next year we will be overtaking China. In a year or two, in terms of population, we will be overtaking China. So that this will be one of the major feats in the Indian history, because we would be the largest country having in terms of population. At the same time, we have one of the strengths there. Almost 53% of the population is young. So Indian government is trying to encash on this particular number, 53 young Indians who want to learn and grow further. Right now, when I talk of digital financial inclusion, a country like yours need to adopt digitalization, because that is the fastest way to ensure that you encompass your population and bring them into the financial world and financial services world. That will enable you to understand that how you will improve the quality of your population. Your role is significant. You have to play a role in improving the quality as a banker also, and as an individual also. That will enable you to take your country forward. So this is a presentation about digital financial inclusion and fintechs. It is not moving forward. Next. Okay. Where is the next? Where is it? Yeah, I got it. So what is, I got settled. Sorry, I am not a techie, so I find it a little bit difficult at times to operate the things. I am comfortable with my machines. This is a new machine that has been given by Institute, so I am not well versed with this. So if we look at the words are very simple. The words are saying that it's digital, financial, and inclusion. Do I have to explain you digital? You all have got mobile phones. Ethiopia is a country where Google is accessible, right? So WhatsApp is there. So Facebook is there. So Ku is there. Ku is not there. Ku is Indian Twitter. Ku is an Indian Twitter. Now Twitter enables you to transmit messages quickly. Before mobile, what was the thing for an electronic communication in the hands of people? You know, we had pagers. I don't know whether Ethiopia had those pagers. Pagers was a small gadget which people used to tie up at their belt, and they used to text. The text used to come. I used to send a text to my friend, and my friend will send text to me. So that was pager. Ethiopia did not go through that migration. This was somewhere in early 80s or little late 80s. Around that period, these pages were there. But then you started with mobile very quickly. I do not know the penetration of mobile networks in Ethiopia, but I believe that you would be having a good network of mobile. And if you carry a mobile phone, whether it is Android or iOS, you are digital. You are absolutely digital. Digital, the word digital speaks of the computer language way back in 50s, because the computer language was in digits, 0, 0, 0, 1, 1, 1. If you have studied little bit of or little history of computerization, so digital word has come from that. And then you have new software versions on your mobile. You have Android. There were initially competitive softwares for Android like Symbians. And Nokia went down the drain because it did not accept Android, and it went on to accept Symbian, and Nokia virtually finished. Nokia as a mobile and as a tech company virtually finished. They are now coming into the 5G, but that's another story. So digital financial inclusion is digital is what technology is using. Handset is digital. Financial is upliftment of poor, reducing poverty. Is a limited economic objective. The bigger objective is transactional, sending, receiving money electronically. How this electronic money comes or go a little bit, I'll explain a little later. Inclusion means your entire country should be having a benchmark of financial services. So that is inclusion. If you have, like India is a very vast population, and believe me, in the year 2018 the data was published which says that almost 20% of the India's population has still does not have access to the banking. If that is the story of India, it would mean that 28 crore people do not have access to the banking facilities and banking services. I do not know about the population of Ethiopia. What's your population? 110. Yeah. So for Ethiopia, if you compare the population of Ethiopia and India, it is minuscule. But still, the growth opportunities plenty. So this is digital financial inclusion. We would want all our people to get the basic financial services without the intervention of intermediaries. Without the intervention of intermediaries, will ensure that the financial inclusion is implemented very effectively. Jim Yong Kim, the president of World Bank Group, what he said about the digital financial inclusion, he said this in a CGAP meeting last year. What is CGAP? Consultative Group to Assist Poor. He said that universal access to financial services is within reach. Thanks to new technologies, transformative business models and ambitious reforms. As early as 2020, such instruments as e-money accounts along with debit cards and low-cost regular bank accounts can significantly increase financial access for those who are now excluded. I do not know the demographies of Ethiopia. I tried to search on Google, but I did not find much of an information and data in terms of your country as to what kind of or what percentage of population is still excluded from the mainstream banking. I am not aware. You could be aware of your data, but then this is what the World Bank Group says, and World Bank and IMF are keenly chasing the financial inclusion. Keenly chasing financial inclusion.
Now, half of the population.
I beg your pardon.
Half of the population.
Half of the population. So it's a huge task ahead of you. You cannot sleep. You simply have to work and work till you die. If half of your population is like that, you need to understand, and then it's only the technology that is going to be an enabler for you, so that your entire country's population is picked up and their level, the standard of living goes up. That's the role your bank has to play in your own country. Now, what is the meaning, actual meaning? Digital financial inclusion involves the deployment of the cost-saving digital means. Now, if it becomes costly, the poor man will not be able to afford it. Now, if the poor man is not affording it, you cannot include them. With the person who is going to avail the services, if he is put to some cost, heavy cost, he will not be able to afford it. That cannot be the purpose of the cost-saving digital means, to reach currently financially excluded and underserved populations with a range of financial services suited to their needs that are responsibly delivered. Underline responsibly delivered. Because responsibly delivered is you. You have to responsibly deliver at a cost affordable to the customers and sustainable for providers. It's a global definition that has been accepted in respect of digital financial inclusion. You can stop me at any point of time. I'll keep on talking. If you have any query, you stop me so that I don't go forward or rush through the slideshow. What are the essential components of digital financial inclusion? You read it, you understand it. Digital transactional platforms enable customers to make or receive payment, transfer funds and store value. One is financial transfers, financial receipts through electronic media without actual exchange of currency but an electronic currency. Why you should not deal into a paper currency? Can anybody respond? The notes, the currency notes that you are having, because it has a maturity. Any currency, paper currency has a maturity. What is that maturity? Not in terms of value, but in terms of its life. Now, if you deal in digital currency, the issue of its loss by mutilation is kept away. Now, digital transactional platform enable customers to make or receive payments, transfer funds. I'll gradually make a flow as to what India is doing. I do not know whether you have Google Pay in Ethiopia. I do not know whether you have WhatsApp Pay. I do not know whether you have other payment technologies. So what I'll try to do, I'll try to show what India is having, how India institutionalize this digital payments or digital receipts, where under in a flash of seconds, money gets transferred from one account of one bank to another account of another bank. Okay. So this is one of the essential devices used by the customer. Can be digital devices such as mobile, tab or anything that can be used, that transmits information, instruments and connect to the digital services as POS, point of sale. You have Amazon, you have by chance the eBay, eCash, all such digital shops are not there in Ethiopia. You need to really think of bringing them to your country, because that brings ease of life, of procurement of any goods or services. Now when I say that transmits information, what is the definition of banking in Ethiopia? How do you define banking in Ethiopia? Can you tell me what the banks in Ethiopia are doing?
Financial intermediary.
They accept deposits and they provide loans. They make transfers and payments.
Right, transfer. You accept deposit for the purpose of lending. That is the Indian banking definition in the Banking Regulation Act. You have in the Regulation Act in Ethiopia? Yes. You have. You know, that will be defining what is banking, number one. That will be defining which are the activities the banks can do. In India, Section 6 of the BR Act defines what kind of activities the banks can do. Tomorrow, if banks start selling fruits in India, they can't do that. They can't do that for the simple reason they have been prohibited. The kind of activities which they can do has been defined. Over a period of time, presuming that you are at the stage when we were in the 80s, presuming, for example, we did not have any digital platform or electronic platform, something like that. We did not have anything on that of that sort then. So what was happening was the funds were not moving very quickly and not moving to the targeted person, the person to whom the government of India or the concerned bank wanted to remit. There is a lot of corruption in between. I do not know what is the corruption index in Ethiopia. Do you have corruption?
Yeah.
Huge? Great. So you are
Like below 30.
little louder.
It's below 30.
Below 6.
30.
Search.
Corruption index vary from 0 to 100. It's like below 30.
Okay.
That means that it's not that much.
Okay. Not that much.
It's not institutionalized.
Okay.
Like other countries. But it's there.
It is there. See, there is no country on this globe which does not have corruption. Wherever you have human beings, there will be corruption. It's like a salt in your food for some people, and for some people it's like a poison in the food. So you have to decide whether the corruption is poison for you or salt for you. Having said that, in India, I do not know whether you have heard of Mahabharata. You have not heard of Mahabharata. Mahabharata is an epic mythological story, and I believe that the corruption in India started from Mahabharata. I mean, Dr. Saab would know much better than me. But then corruption is ingrained in human minds. Whosoever is the Prime Minister, kitna bhi karo, I mean, do whatever you want to do, it is very difficult to eliminate. Because the integrity is how you behave when you are alone and nobody is watching you. So if you misbehave when you are alone, you do not have integrity. You behave good when people are watching you. Unless this element is ingrained in the population, if the population understands this, the element of corruption will go away. There is always me, myself, what about me? That creates the situation of corruption. Otherwise, I feel we can work hard, but will rarely succeed in eliminating the corruption. Same story here, but the percentage has come down substantially. But that's not the topic of our discussion. Here what I'm trying to tell you is that in India post 80, the banking definition has changed, especially post computerization, the banking definition has changed. And what is the practical definition of banking, I tell you? It is exchange of information. Acceptance of deposit for the purpose of lending, gone. Gone. It is exchange of information. What I know, what you know, we trade on information. So you have Ethiopia is having excess pocket, less pockets. You have Addis Ababa, rich, well, good city. What about several other cities where even water is a problem? But that's not the story. But what I'm trying to tell you that's where the idea comes up, that transmits information. The electronic media or the financial inclusion includes transmission of information. What is the information? That I'll cover in my subsequent slides. This is one more typical story which I do not know whether you are having, we are having. We have almost over 10 lakhs agents across the country. Now what these agents are doing, these agents are ensuring the last mile delivery of banking services. Potentially a good service, but potentially a threat. How it is a threat, we'll see later on. Retail agents that have digital devices connected to communication infrastructure to transmit and remit, receive, convert cash into electronically stored values. Digital device, we got mobile banking is one part, but second is digital devices where a person goes to the customer at his doorstep, at his house, at his shop, collects the cash, gives him the receipt immediately, creates his bank account. We have a very small bank here near Satara. You visited Y Bank the other day, right? Yeah. Near Y Bank there is a small town known Mandgaon, Mandeshi. Mandeshi Bank is a small bank floated by women for women using all digital media to cover all village population. They are catering to almost 400 villages in that particular taluka or in that particular province. And what they are doing? They are extending financial services to the poorest of the poor within that area. How this can be extended, we will see in a subsequent slide. The essential components, one more essential component is that enables additional financial services like credit, savings, insurance and securities. Now you have, at least in India we have a lot of platforms, a lot of companies which are offering these products electronically at door-to-door service. Despite this, the government of India says that there are 28 crore people who have as 0.28 billion. They have not been able to access to the banking services. That's a huge number by India's standards. Why do you need a digital financial inclusion? You need it because of this. For 2.75 billion adults globally, this is 2018 data. 2.75 billion adults of the 7 billion population then existed globally, who transact exclusively in cash. Lack of effective access to formal financial service and having digital access to financial services may be transformational. This is 2018. Across the world, there are 2.75 billion adults who are dealing in cash. Now give them electronic devices, give them electronic products, give them access to the financial services. But still there are people who don't like all this digital because it comes into the government of India's record or your government's record, and that cuts short the corruption. Now if your government is not strongly willed to correct the corruption, there will be limited scope for growth. But if government has a strong will, it will push for digital reforms very rapidly. And you as bankers, whatever the 7-8 banks that you are having, you as bankers has a critical role to play there. And this is the best way to include underserved population globally. It is a fantastic idea. Digital financial inclusion will ensure, because if the population is happy, your country is happy, you live healthy. What are the advantages of digital financial inclusion? You can give access. I want a water. Yeah, thank you. Now, access to formal financial services like payments, transfers, savings, credit, insurance, securities, KYC, that too 24/7. You ask me about any of the words which you have not understood. Do you do KYC? Yes. You do. How do you do that?
Manual.
Manually you do that.
Yes.
What do you do? What do you obtain? Like in India we have Aadhaar, or we have a PAN, income tax registered number, or an Aadhaar as a unique identification number. How do you identify an individual in Ethiopia?
We use ID card.
Which ID card?
Normal, given by village.
Okay, given by the village. Okay. But then there is some ID card.
We don't have
national ID.
That is one of the things you.
Tax identification number is not accessible for all. TIN number is used for few people.
Okay.
So the majority are.
There's a lot of things they have to do. I mean, if at all they have to ensure that your people grow financially and or otherwise, these are the things which you need to do. Now, you cannot do, but your government has to take steps and make some investments in infrastructure. Our government started 25-30 years ago, and we have reached this stage where almost every individual is having a national identity card. We call it Aadhaar. And every taxpayer individual is having a PAN number, permanent account number, through which all my financial transactions can be seen by anybody, any individual. If somebody gets my number, PAN number, he can check what kind of financial transactions I have done. Of course, that is still under the process of improvement. Recently, in last 2-3 years, a lot of politicians in the country were arrested because of the financial misdemeanors. How the government of India got the idea? Through the CTR and STR which the banks filed. Cash transaction report and suspicious transaction report are the two reports every banker has to file after regular frequency. Now, if you do certain cash transaction through any bank in the country, it will be reported beyond the threshold limit. Now, once that happens, you have to justify every such transaction, whether it is receipt or payment. Now, if it is done digitally, you are trapped immediately. So, the parallel economy which damages the country can be arrested, can be curtailed, can be shortened. Now, this is what the digital financial inclusion advantages which it is offering. One is access to formal services like payments, transfers, savings, credit, insurance, securities would mean all equity as well as debt funds, equity funds as well as debt funds. Typically very low cost. Now, if the cost is not low, you cannot really include everyone. If there is a price tag, so what the companies, governments and banks are doing, they are investing huge in technical capital, substantial capital investment they do, and they work on volumes with a low cost fees. That enables that their payback period for the investment is less than 7 years. So, if you purchase a server for a financial transaction and the price is say 1 crore of rupees, you need to build a volume of transaction which will enable with a minuscule fees collection, maybe 1 rupee, 2 rupee, with the smallest of denominations, you can cover on the basis of volumes. That kind of model you need to build, where you work on volumes and the capital investment is maybe recovered by a period of any capital investment, technical investment. If you have a payback period of 7 years, that is considered to be healthy. But if the payback period exceeds 10 years, you need to rework. You need to rework on volume and need to rework on sizing the technical equipments that you need. Customize additional services. You can get customized services. Now in India we have mobile banking. Almost every bank is giving mobile banking. And this mobile banking has changed the entire banking picture in the country, which has enabled financial inclusion very quickly and very rapidly. For example, my bank is having a mobile application. And this mobile application offers almost 27 services to the individual, 27 different types of services for which they need not come to the bank, and transactions up to 10 lakh rupees is allowed. We are typically a metro and urban area bank. So typically, depending on that what is your niche area, you have a product. But then here the people themselves can customize what they want within the range of product that is offered by a financial institution. Once you do that, what the other party needs, what your customer needs, he can decide. I want this. I want a fixed deposit with a lower maturity and higher rate of interest, which is an inverse relation in banking. But then that can also be worked out. Loss of cash is not there. Nobody can steal your pocket because the money is electronically stored. It's only your password that has to be complex. If you keep a simple password, normally what the kind of password we keep is that wife's name, wife's birth date, son's birth date. These are our passwords, so that we should not forget. Now, I know that you got 2 sons, 1 wife. I know. I am in a position to track your password quickly, take your money. India is facing this now. In India currently the financial frauds are happening where the passwords are cracked very quickly. Because you are on several social media platforms, you are on Facebook, you are on Twitter, you are on Instagram, everywhere you have a password. And these Americans have ensured that the data of their customers, they have sold off. So if you have a Facebook, your particular profile is with somebody else, with some hacker. And you know the underbelly of digital frauds. I mean, that's a different session. If I start talking on that, the purpose will be lost. But some other time, if you give me an opportunity, the underbelly, global underbelly of digital frauds. That's a new area that is coming up. The internet, what you see is not the internet. There is a dark web. And that dark web steals your data and sells it, makes money. You have hacking. You have professional hacking degrees and diplomas. What do they teach you? They teach you to enter into your mobile and your computer if you are connected to the www. Period. So what are the safety standards? Of course, that's a different story. We'll talk someday about it. But then because of digital loss, risk of loss and theft is limited, and then robust cyber security standards are prescribed. Unbreakable passwords is one of the things. That is what the digital financial inclusion, the advantages that it gives. A quick and fast service rather than physical interface. Quick service. You want something, use your mobile, send money, talk to your friend, ask him to WhatsApp money, get it quickly. You don't have to visit the financial institution for getting all your banking services. No way. For a need up to 10 lakhs rupees, don't walk into the bank's branch. As simple as that. As simple as that. Don't worry, I'll share this presentation with him so that all of you can get a copy of it. So don't worry, whatever that I'm trying to give you, you will get. What are the risks in the digital financial inclusion? The customers you are trying to cover are underserved, are illiterate. They don't understand how mobile is operated, they don't understand the language of the mobile. What happens? You get cheated quickly. Now, risk. In India, there is a word, perhaps doctor will understand that better. Naya hai yah. Now, anything new, you are attracted differently. Now, if you try to cover up a new person who is not open to the digital financial services, he is going to like that. Once he likes that, the swiftness of the services, once he likes that, he is going to make a mistake. He is going to share his password. He is going to push accept button quickly without understanding the financial impact. So that's one of the risks, and how this risk can be eliminated? Through literacy. And then exploitation. You are having digital banking services on your mobile. I am more intelligent than you, and then I try to teach you how to do this. Give me your mobile, I'll do this. Fish off your money. For a new people, this is vulnerability. And then agent related risk. I do not know whether you have a structure of agent or a business correspondent in Ethiopia. Reserve Bank of India in India has allowed the appointment of business correspondent for remote areas where the banks are not in a position to reach. Now he is an individual representative of the bank, not necessarily the employee of the bank. Now if his integrity is broken, he can cheat people. He can cheat people in a number of ways. Give me cash, I'll deposit in your account. Yes, cash is given. It's never deposited. The poor fellow doesn't even understand where the money is gone. He never understands. I'm sorry, a couple of times I'll be using Hindi, but they will not understand that. So I'll try to immediately convert that. This is a story for India. This is a story for India. When I say that absence of perfect legal infrastructure for protection of customers, the existing laws of the country are not clear enough in terms of the digital electronic media. Despite having spent 20 years in digital financial inclusion, this is the story, this is the truth. So when you try to do it in your country, you need to ensure that you have a perfect legal framework. We are trying to work out on several laws. We are trying to work out, and in fact we have Information Securities Act or Information Protection Act. That act is being amended in the country so that there is a proper security. And then there is one more new bill which the US and Europe has stalled. India wanted to go ahead, but then the political interference ensured that the bill was not tabled in this session of the Lok Sabha. That is the highest lawmaking body of the country. The bill was known as Data Protection Bill. Now, Data Protection Bill was ready. There was a joint parliamentary committee which has cleared the draft of the bill. But then there were economic interests for several other software companies and several other sellers, and they didn't want that bill to be tabled. The bill will be tabled subsequently. How it happens, I do not know. But then the advantage of that bill for the country, for the India, was that every service provider, whether it is banker or otherwise, would be subjected to data protection commitment of its customers at all points of time. So if there is a data breach at any point, whether it is a bank, whether it is a service provider, whether it is goods and shop services, if you have a data, you have to protect it. Currently that law is not there. Now if that is the evolution stage in India where things are not yet stabilized, you have to work on so many things. So you have to ensure what are the current laws which are available and applicable in your country. But that is one of the risks in this digital financial inclusion. Digital technology related is dropping of messages. Financial messages are dropped. I came here in this institute and my network was gone. There are 5-6 network providers in the country. I am a member of Airtel. The moment my car entered this premises, network was gone. After hectic efforts, I could somehow get some connection. Forget about message dropping. There are pockets within the country where the network is not reaching. What kind of digital financial inclusion you are talking about if this is the story? This needs an improvement, but then if your country is trying to do that, this is one more area where you have to ensure that the mobile network providers are healthy and willing to invest in technology. If they are not willing to invest in technology, you can never reach and do this. Banks alone cannot do this. You have to ensure that the government of India did in 2012-2013, where the mobile network providers were involved in the technological things which the government of India wanted to do. We have reached a stage after 8 years where we can tom-tom about this, that we are one of the best. We are globally the best in terms of digital transactions. We have overtaken US. But this is because of the infrastructure that has been built. But therefore, these risks, you have to ensure that these risks do not occur. I do not know of the topography of Ethiopia, but that's how you will have to decide. Excess pockets, less pockets, everywhere. You will have certain areas where there is huge population, you will have